Tesla keeps letting people down. But is that really because Elon Musk is too busy with other things? Or is it just that the early fans already filled their garages? $102 billion vanished, and the media called it a crash. But crash for who? Musk or you? While they fed you dramatic headlines, something else was happening behind the scenes. Something you weren't supposed to notice. Because this isn't just about a billionaire losing some money. It's about seeing how quickly they can turn fear into control and control into profit. And the fact that you're still watching, that already means you're in a different category. Most people only see dollar signs. You're starting to see the patterns. That puts you in a much smaller group than you might think. After this, you won't look at a loss the same way again. But stay sharp, because this isn't just business news. It's a mental game, disguised as a dip in a stock. They called it a wipeout. From December 2024 to April 2025, Elon Musk's net worth reportedly dropped by $12 billion. Tesla stock went from $388 down to $230. The business media went wild. Analysts used words like crash, bleeding, disaster. The public nodded along, kept scrolling, and soaked it in like it was the full truth. But what if the most dangerous part of the story wasn't the number itself, but how that number made you feel? Because here's the thing no one's really saying. Elon Musk didn't really lose anything. He just adjusted his position. Let's clear the air. That $12 billion a loss? It's not like someone came and took cash out of a vault. It's just the calculated value of Tesla shares dropping from their December high to their April low. Musk holds about 715 million Tesla shares. Multiply that by the price drop and yeah, you get a scary number. But most people stop thinking right there. They don't ask what comes next. Here's the truth. Tesla's market value is still hovering around $740 billion. That's still over 3 times Ford's market value, more than 5 times General Motors, bigger than the entire economy of Poland. So what did Elon actually lose? Practically nothing, except maybe your belief that he's fully in control of the world you live in. When numbers dip, regular people get nervous. We pull back, we sell. That's how we've been trained. But billionaires, they move differently. Elon didn't sell. He didn't even flinch. He told Tesla employees to hold on to their shares, and he did that while the media was ripping him apart. Then, just like that, Tesla's market value bounced back by $13 billion, all because of something Musk said. That's not panic. That's precision. And who was the audience for that move? You. This whole thing isn't just a stock movement. It's a battle for the narrative. Musk is playing a high-level game, while most people are just staring at graphs. So why does the media shout about a loss when Elon hasn't sold anything? Because it feels like a loss. And feelings are what drive engagement. Headlines don't have to be accurate. They just have to hit the right emotions. Key $102 billion gone isn't really a fact. It's a lever. A lever aimed straight at how you see the world. And if you're still watching, that means you're starting to loosen that grip. Let's look at one of their favorite fear triggers. The term margin call. Sounds intense, right? Feels like something urgent is happening. But the concept is actually simple. If you use your shares as collateral for a loan, and the value drops too far, you might be required to sell some shares to cover the difference. That's the part where they say billionaires bleed, but that's not the full story. In 2024, Musk pledged 238.4 million of his Tesla shares as loan backing. That's about a third of his stake in Tesla. The media pounced, saying if Tesla dropped more, he'd be forced to sell. But here's what they left out. Even at $230 per share, those pledged shares are still worth more than $54.8 billion. Musk's loan exposure? Likely less than $10 billion. That gives him a loan-to-value ratio under 20%. That's not risky, that's almost bulletproof. Not just safe, nearly untouchable. So why all the fuss? Because everyday folks don't think like investment houses. They see a red number and assume it means collapse. But Elon planned for this. His safety net is so wide, most people can't even grasp it. Even platforms like Seeking Alpha, known for no-nonsense investing, call the media panic unfounded. Still, the rumors keep flying. Why? Because Musk lets them. Really think about that. He could end the talk with a tweet, a chart, a short statement, but he doesn't. He stays quiet, keeps moving, calm, intentional, because uncertainty fuels curiosity. If people think there might be a margin call, if experts wonder if he'll be forced to sell, that keeps the spotlight on him. And in Musk's world, attention is currency. It's the only resource that grows just by being used. When Tesla stock shakes, the media gets louder, and Musk, doing almost nothing, stays at the center, like a black hole pulling all the focus toward him. Even without saying much, he knows what most CEOs don't. You don't push against fear. You guide it. Let the world wonder. Let them speculate. The more noise they make, the more your silence becomes powerful. The market, always desperate for direction, starts looking for clues in every small move. This isn't just finance, it's performance art. Looking vulnerable becomes an advantage. A falling stock price becomes a distraction. And while the media rants about possible margin calls, Musk stays cool, unshaken, untouched, and absolutely in control. On March 21, 2025, the drama was still playing out. The world watched stock charts, listened to analysts, and waited to see what Musk would do next. But if you look closer, you realize he's not reacting, he's orchestrating. While others focus on falling prices, he counts attention. While most people worry, he's constructing something else, not just a business empire, but a new way of shaping the story. Because this isn't just a financial hit, it's a masterclass in narrative control. Elon Musk isn't losing. He's rewriting the script. While everyone else obsessed over numbers, Musk focused on meaning, and meaning, real emotional story-driven meaning, is what people follow, not technical analysis, not investor briefings. If you can shape the meaning, you don't just ride the market, you control it. Without even touching a stock, most people miss that. They're watching charts, waiting for patterns. But the real signals, they're emotional, they're psychological. The true market movers aren't reacting to data. They're writing the plotline and choosing their next scene before the curtain rises. Every dip is an opening, every panic is a recalibration, and every time someone reads a headline and accepts it without thinking who benefits, they're just a part of the performance. But if you start to recognize the pattern, you stop being part of the crowd. You start becoming something else. Someone who understands that fear is for sale, that crisis is a product, and that news isn't reported, it's designed. This story, it was never really about Tesla. It was about how you react. It was about your assumptions, your belief that billionaires lose wealth the same way you do. But they don't. They hold the blueprint, and they make the rules. Elon Musk didn't just make it through a media storm, he turned it into fuel. And the wave that carried him, it was built from your clicks, your shares, your time. While they're still talking about his losses, he's stacking up influence like currency. And in the world we live in now, attention is the strongest asset on earth. So next time they say someone lost billions, ask who gained your focus. Ask why the story felt urgent. Ask what else you're being distracted from. And ask yourself one last thing. If Musk isn't actually losing, then what exactly are you looking at? Because in a world where everyone's shouting, silence might be the loudest move of all, and the quietest person in the room might just be the one holding the controls.